Here we have the 15-minute price chart for MICROCLOUD Hologram Incorporated, stock ticker HOLO. If you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other members and other traders will be able to find this information more easily. So looking into this price chart, we can see that the stock has seen some fairly significant price movements here in recent trading sessions. So specifically what has occurred here is essentially the price has moved from just under 30 cents per share all the way to roughly 76 cents per share, which is a very massive price movement in a very short period of time. However, when we look into this price chart a bit more deeply, we can see some very important technical signals which show that certain trading stances should be taken given the way that this structure is currently unfolding. So in this video, we will be looking at some very specific price levels here and looking for ways to identify profitable trading strategies for this stock going forward. So currently what we're looking at here, as I said, is a rally which really stems from just under 30 cents per share all the way to 76 cents per share. Of course, this is a very massive price movement. We've seen share prices more than double in a very short period of time. So it does make sense that many traders are currently interested in this stock and wondering if the share price has the potential to run higher. If we move back on this price chart a bit, we can see that some fairly significant levels of resistance have now been broken. So essentially, if we look back to the price highs, which were posted toward the roughly the second half of July, toward the end of July 2024, we can see that prior resistance levels really came in right around the 72 cent mark. So in the periods that followed, we really did see some fairly significant declines, and this does show that the 72 cents level was very critical in terms of identifying potential resistance zones for the stock. So as this decline occurred, we did start to see a base here form at roughly 30 cents per share, and then price movements that did start to extend higher much quickly. In this most recent price movement, we can see that the 72 cent resistance level has now been broken. So of course, it's not surprising at all to see that there's a lot of new interest in this stock. People are wondering whether or not this move is the real thing. But there are some key issues here that should be watched, given the fact that current readings in the relative strength index do not support further upside, especially essentially what we're seeing here. What's especially important in this relative strength index reading is the fact that we are seeing a bearish divergence in the indicator reading itself. So what does that mean? If we're looking at the relative strength index at the bottom of this chart, the purple line shows that share prices became heavily oversold as share prices were starting to develop within this rally. So essentially, this price movement here really didn't take much for this stock to start to enter into overbought territory. This price movement here essentially sent the stock into overbought territory, which is probably quite confusing for some people, given the fact that we did see this tremendous rally higher. It's a bit difficult to call this overbought when you're able to see such a large extension here to the top side after the indicator reading was flashing these warning signals. But the real problem here is the fact that bullish and bearish divergences tend to be some of the most powerful technical signals in all of chart analysis. So essentially what we're seeing here is, yes, you can make the argument here that share prices did continue to move higher, and that is significant. But we have to remember that share prices were essentially flatlining prior to this. And this does create a scenario where it becomes, for example, much easier to rise above exponential moving averages and things like that. With all of this price action, we can see that this bearish divergence activity did start to occur. So let's just explain what this means exactly. Essentially, what we're looking at here is a decline in the relative strength index reading, which, as I said, is this purple line here. The yellow line is the exponential moving average of the relative strength index. So as we can see here, the trend in the relative strength index itself has grown negative, even as share prices tend to move higher. So what this basically means is that the indicator reading is not confirming this movement to the top side. So let's kind of draw this here. Here we can see that share prices are continuing to move higher as the indicator reading itself is starting to move lower. So this is a major warning signal here. And what this does suggest is that the share price itself is going to be very vulnerable to downside price movements. So for these reasons, I am not currently recommending this stock as a buy. in my members only trading room. I do think that we have much better small cap opportunities available right now, rather than HOLO. There are many stocks. For example, I just released a video today, which has potential upside of more than 200% going forward. This is a much better established company, with much stronger fundamentals, and the current activity that I think we're seeing here is much more erratic in nature, and is much more short term in nature. So, of course, nobody really knows the future, and anything could happen with this stock. But what I would be watching for currently would first be a break below the 56-cent mark. If we did see a break below there, this would suggest that near-term support has been broken, and then the 100 period exponential moving average could start to come under attack here. That would be this second purple line, which is shown on the chart. The real issue here to the downside would be if share prices broke below 47 cents per share. The reason that I point to this area mostly comes from the fact that this is the 61.8% Fibonacci retracement of this major ascending move here, of this major bull rally. 61.8 is a very important Fibonacci number. And if we do break below here, this would suggest that a deeper retracement is coming. And then in addition to that, you also have this rising 200 period exponential moving average that is now coming into direct contact with this area. So in my view, this is the most critical level of support. You could technically give way here at 56 cents and still be somewhat okay with the stock. But I do firmly believe that if the 47-cent level is pierced to the downside, that this entire trending move is likely to be retraced. In other words, if we do see a break below 47 cents, I do think that we're going to trade right back toward this 30-cent mark. So that would be a very significant reversal in both directions. And this is essentially the reason I have not been recommending this in my members-only trading section. I do think that there are just many better stocks out there that have stronger fundamentals and have just better trend structure in the charts themselves. So, of course, this does not mean that HOLO could not continue to move higher. It's totally possible. But I would definitely be watching for a break of support here coming in at 47 cents, because I do think that if that occurs, I think that this entire trending move higher is going to be retracing itself, and that the stock will retest these prior lows right around 30 cents per share. So here's the current market outlook for MICROCLOUD Hologram Incorporated, stock ticker HOLO. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.